Oh, wow.
It's you said, at home or going to the movies. You have Netflix, but you have zillions of those. There's Disney, and how do you fight with that?
It's Netflix is an amazing organization, but when you look at, I'm going to start with the numbers, right? I'll start with the numbers and try and break it down, because to a lot of people, you're going, I'm going to watch a movie tonight, right? So the currency is, I want to watch a movie. So it's either pre-planned trip out to go to a cinema, or I'm going to sit on my sofa and watch a movie. And to the consumer, they're the same product, but they are far from the same product in how they're created, right? One, which is Netflix. It's a subscription model, obviously. Over 300 million subscribers worldwide. Lowest subscription is Pakistan, where it's like $1.05. Highest subscription charge is Switzerland, where it's over $30. And so if they have 300 million subscribers and they own the distribution network, they own the platform. And then if you look at the amount of money that they generate, including advertising services, it's around about $39 billion a year. That's what Netflix earns, right? Consumers don't care about that. But when you look at how a movie studio operates, and there's a blend of major studios, mini majors, and indies, they're competing for a much smaller share. They're competing actually for about $30 billion of box office sales versus Netflix at $39 billion. But when you take the $30 billion and break it down, the studio doesn't earn that money because it doesn't own the distribution platform.
Exactly.
The cinema chain does, right? And the cinema chains are different. You can go in the UK, you can go to...
So the 30 billion, they cover the income for the studio and for the cinema
Correct.
Cinema
That's
chains.
the tickets. That's the global box office. So that could be an amazing cinema with beautiful lighting, sound and screen, and great beverage options, which you have to pay more for, and snacks, right? Or it could be a really aging cinema in somewhere in Europe where it's only open certain hours.
Oh, I know one is in the cellar.
Exactly.
It's terrible.
So really, when you look at that 30 billion, half of it goes to the platform, to the cinema and the chains, because they're typically in downtown locations to be part of a city centre, or they're shopping malls as venues that are more of a destination.
Like they do right in Dubai nowadays.
Exactly.
So it's like a commodity. It becomes a commodity.
Without a doubt. So now you've got all of the studios aiming for $15 billion of income, because half of it has gone to the cinema chain groups. So now you've got a very competitive situation where you're all trying your best to get to $15 billion of income. But here's the problem, right? When you think about the consumer thinks, well, it's the same product. If you look at how you put that cake together, right, so to speak, Netflix average cost of making a movie is less than $30 million, $35 million. Yes, of course, they have some that cost way in excess of that, and they also have some that sit way
Why is it
below
cheaper
that.
than the others?
It's because they will already turn things around with less movie stars, and they're shooting using a lot more technology, a lot more AI.
So when they know they own the distribution.
They own distribution, so they know the value of putting a product through their own internal system.
So they need to be less broad. They just do something that is totally focused for their client.
It's a numbers game. So they will create a product that fits their store.
Yeah.
And some of those products need to have more investment behind in terms of production, because it's used to grow subscribers. And other parts of that product are there to maintain subscribers. So they create the product that fits their shelf. So when you think about the marketing they need to do for something that's going into their own store, where they have all of these subscribers already, their marketing costs are significantly lower. They can be as low as $2 million and stretch as high as $15 million, right?
Because when you open Netflix, you can see
Exactly.
I mean, the algorithm will choose one for you, which is different from me or for whoever.
I mean, they do have some hero placements of this movie's opening now, I think, which really helps. But then for a movie studio, they're still trying to create fine art. Yeah. Already they're fighting for less than half of what's available on the table. but they're essentially thinking, how do we make this movie be the best movie it can?
Yeah.
And depending on, again, a movie studio will make a portfolio of movies.
Yeah.
Like any business, it has to balance the risk and make a portfolio. But some of those movies can cost, 10, 15, $20 million if it's a genre movie, like a horror movie, or if it's a really big blockbuster or complex movie, it can cost over $150 million to make.
That's Disney, right? So if I there are the studios and there is Netflix, but in the middle there's Disney that has its own little Netflix, so you can subscribe. I have it personally, but they also have those super blockbuster movies that bring 1 to 2 billion for release. The Avengers was them, right?
Yeah, the Avengers. I mean, they created that cinematic universe to exactly help launch their own product. I think they self-criticize themselves as well, which is we maybe made our films too accessible, and maybe we did too many of them, because then you can't forget the fans and consumers. Typically, it's the same person that's going to, like, a film fan is about 20% of the population of a country. Yeah. It's not 100%. There is definitely a good proportion of people that never go to the movies, right? There are more people that you can reach at home. So I think that you've got Disney that is a hybrid, that to part of it, Disney Plus definitely serves a need. But the movie going model, the movie making model hasn't shifted quick enough. No. Those Avengers type movies cost well in excess of $100 million to make. And then you've made the film. But then you think, well, we've got a distribution platform in Disney Plus, but let's not make it available at the same time as it being in cinemas. We have to respect the window, as they call it. It's called the window for income. See,
it's interesting, isn't it, how studios are reacting, or there's the new entrant that disrupts the whole industry, and some of them will just react differently. Disney has a certain way, and they're only the only ones. Huh?
There are more in there.
Amazon is also entering it. It was different. I feel Amazon is different. They were not at all in the movies, but they have clients, and they thought, oh my God, let's make things available for them, and oh my God, let's buy a studio. We have so much money, we can do that. So there's plenty of different strategies to get in there. But the bottom line is, there is a lot of disruption and changes in industry, and it's about survival. So super high competition. What I see in insurance is also similar. I mean, the ecosystem it's probably more diverse in a sense,
right?
That there's many different players. So more diverse. Maybe every movie is different. So if we can take every movie is different, you can also have something like that in the ecosystem. So you have a lot of different. I mean, there's regulation, there's a lot of things that create borders, so it's more local in terms of disruption. But there's a big chunk of disruption. And even insurance companies, they say, okay, what do we have? I mean, there's some companies that had agencies. Do we work with independent distribution or not? Then the independent distribution in some countries, they're very powerful. In other countries, less powerful. But there is a lot of movement and willingness to drive for each of the segment of the distribution value chain to try to survive and to keep on growing. So how to fight against that? Insurers have said, okay, we have agents now. We work with brokers because we need to work with them. They are also very powerful. Clients want to work with brokers. They have value as well in the whole ecosystem. But at the same time, they do that. They say, oh yeah, no, we're going to work with independent distribution. But now we're also going to have our own direct distribution, not with agents. And they come with new ideas. And it's not even doing themselves. They have subsidiaries doing it. So you spoke about contradiction earlier. Which part of the ecosystem are we playing in? Well, we play a bit in this one, a bit in this one. And you have tribes inside big groups that say, oh, we compete against each other. And actually, it is competition. Sometimes it's even different product or different systems. It's testing the water, see what works best. But it's about survival, isn't it? It's always about trying to get its space.
I think that it's competition and survival. They're part of the same conversation always. I think for when you start to look at a Netflix, they're so big. They're the number one player when it comes to streaming. They're going to have the same pressures, right? The shareholders and the share price denotes that they have to chase growth.
Yeah.
Right. And they will have to evolve to chase that growth. The more legacy movie studios that are still making very expensive movies, okay, they've managed to balance portfolios. Unfortunately, they're not taking as many creative risks because it's easier to make a film that sits in the same franchise or has the same tropes as a franchise as they've done before, because they can understand the risk-reward model that little better. But failure is a big part of taking product out in the entertainment game. And when you fail hard, everybody sees it. And I've never known the podcasts in the entertainment business are probably some of the meanest podcasts I've ever listened to, because they really enjoy the failure. They rarely celebrate the successes, but they celebrate some of the failures of movies. And I've worked on movies like Cats, so I really understand some of that failure. Right?
What movie?
Cats.
Yeah, exactly.
Thank you. It made me repeat it. That's painful twice. But it's really interesting that, because it's been always put up on the biggest screen, in the headlines, and it's cultural. Movies are a cultural moment, and marketing campaigns are trying to convince people that don't miss out on this cultural moment. It becomes more difficult, and because people want to be part of a cultural moment because it's fresh and original, or it's so well done. I mean, Bond has a great legacy because it ups the stakes and ups the game each time. I don't know where it's going to go to next, and as the producers have changed.
I'm not James Bond.
No,
I'm not the next one.
There you go. There's the announcement of the day. Yeah, but it's a challenge. But when you've a lot of engineering biased businesses, data driven businesses, certainly on the social media platforms, certainly talk about this culture of failure and fail fast and see what you've learned. It's really difficult in the entertainment space when you've taken 7 years, 5 years to come up with the idea, and another 2 or 3 years to get that idea into a product to then launch it, and it fails. It's pretty hard. And it's not just the filmmakers involved, it's all the people in the marketing teams and the agencies and all of those, adjacent businesses. They fail with you, and it's hard, really hard. And I think it'd be nice for the successes to be celebrated a little bit more. Yeah. So the failures just feel just that little bit less abrasive. But failure like in the insurance game?
Well, failure is inherent to the game. So you can have a lot of growth, success, and the bottom line is suffering. You can have an amazing product that would work perfectly in bottom line, but you don't sell one single one. So there's a lot of there's a lot of example. But in terms of fail fast, I think insurance has the ability to test much better what works, what doesn't work. You can see an insurance company as with a catalog of products. You think there's maybe 10, 20 products, but actually there's so many products, so many different products. And some of products, they sold 2 or 3 times. But it's a variety. There's just like an optional product next to another one with a different option, different options. So you can tweak the product a little bit to change them and to make them much more attractive to the market. So, and that's something that you work with distribution, focus group to see that. But if you look at the system of insurance companies, they have a very few products with enormous amount of client, and a long string of product with very few clients. Right. So the fail fast is working. It's inherent to the business because it's built in. So it's a scenario that will be tested by the whole value chain, but usually it's the product department, the market management, or other those more laboratory that can use that.